Here's a fact that should make every American over 60 stop and listen. The average retiree loses between $82,000 and $120,000 in Social Security benefits over their lifetime, and most of them have no idea it's happening. I'm not talking about fraud or identity theft. I'm talking about 5 simple mistakes that millions of seniors make every single year. Mistakes that the Social Security Administration will never warn you about. These errors quietly drain your retirement account month after month while you think you're getting everything you deserve. The good news is that every single one of these mistakes is completely avoidable once you know what to look for. And today I'm going to walk you through each one with exact dollar amounts and specific steps to protect yourself. Stay with me because this could save you thousands of dollars. Let me put this problem into perspective with some real numbers that might shock you. Right now, over 69 million Americans receive Social Security benefits. And according to a recent study by United Income, 96% of retirees claim their benefits at the wrong time. That's not a typo. 96%. The financial impact is staggering. Claiming just 1 year too early can cost you over $17,000 in lifetime benefits. Claim 5 years early, and you could lose over $100,000 that should have been yours. Here's what makes this even more frustrating. The Social Security Administration processes your claim. They send you a check. Everything seems fine, but they are not required to tell you if you're making a costly mistake. Their job is to process your paperwork, not to give you financial advice. That responsibility falls entirely on your shoulders. Now let me share something that really puts this crisis in perspective. A 62-year-old who claims early versus waiting until 70 gives up approximately $32,000 every single month in delayed retirement credits. Over a 20-year retirement, that adds up to over $160,000 in lost income. Think about what that money could mean for your family. That's enough to pay for in-home care if you need it. That's enough to leave a legacy for your grandchildren. That's enough to actually enjoy your retirement instead of worrying about every bill. And it gets worse. These mistakes often compound with each other. Make 2 or 3 of these errors together, and you could be looking at losses well over $200,000. The system is complicated on purpose, and the people who understand it best often profit from those who don't. Mistake number 1 is claiming benefits at 62 just because you can. This is the most expensive mistake retirees make, and 62 remains the most popular age to claim. Here's what the math actually shows. If your full retirement age benefit is $2,000 per month, claiming at 62 reduces that to just $1,400. That's a 30% permanent reduction for the rest of your life. But waiting until 70 increases your benefit to $2,480. That's a 77% difference between claiming at 62 versus 70. Now, I understand that not everyone can wait. Maybe you have health concerns or you've lost your job. But if you're healthy and have other income sources, every year you delay past 62 adds approximately 8% to your benefit. No investment in the world guarantees 8% returns. Call Social Security at 1-800-772-1213 to get your personalized benefit estimates at different ages. Mistake number 2 is ignoring spousal benefits, and this costs married couples tens of thousands of dollars every year. Here's how it works. If you're married, you can claim up to 50% of your spouse's benefit even if you never worked a day in your life. This is money that's completely separate from your own work record. Let's use real numbers. Say your husband's full retirement benefit is $2,800 per month. You could be entitled to $1,400 monthly just as his spouse. That's $16,800 per year you might be leaving on the table. And here's where it gets tricky. You can only claim spousal benefits after your spouse has filed for their own benefits. The timing has to be coordinated carefully. Divorced spouses, listen up. If your marriage lasted at least 10 years, you may still qualify for spousal benefits from your ex, even if they've remarried. Contact Social Security immediately to explore your spousal benefit options. Mistake number 3 catches working seniors completely off guard. It's called the earnings test, and it can temporarily reduce your Social Security check to almost nothing. Here's how the trap works. In 2024, if you claim benefits before your full retirement age and earn more than $22,320 from work, Social Security withholds $1 for every $2 you earn above that limit. Let me give you an example. Say you're 63, collecting benefits, and you earn $40,000 from a part-time job. That's $17,680 over the limit. Social Security will withhold $8,840 from your benefits that year. Now here's the good news. They don't always tell you. This money isn't lost forever. After you reach full retirement age, your benefit gets recalculated to credit you back for those withheld months. But in the meantime, your monthly checks shrink dramatically, and most people have no idea why. Mistake number 4 involves taxes, and it blindsides millions of retirees every single year. Here's the truth most people don't discover until April. Up to 85% of your Social Security benefits can be taxed as regular income. The formula is complicated, but the thresholds are surprisingly low. If you're single and your combined income exceeds $34,000, up to 85% of your benefits become taxable. For married couples filing jointly, that threshold is $44,000. Combined income includes your adjusted gross income plus non-taxable interest plus half of your Social Security benefits. Many retirees are shocked when they owe thousands in taxes because they withdrew money from a traditional IRA or had unexpected investment gains. Strategic planning is critical. Consider Roth conversions before claiming benefits. Spread out IRA withdrawals over multiple years. Work with a tax professional who specializes in retirement income. The planning window closes once you start receiving benefits, so act now. Mistake number 5 is the survivor benefit blunder, and it devastates widows and widowers who don't understand their options. When your spouse passes away, you become entitled to 100% of whatever benefit they were receiving. This is called the survivor benefit, and it's completely separate from your own retirement benefit. Here's the critical strategy most people miss. You can claim survivor benefits as early as age 60 while letting your own retirement benefit grow until 70. Or you can do the opposite. Claim your smaller benefit early while the larger survivor benefit grows. The key is that you never receive both at the same time, only the larger of the two. So timing your switch between benefits can add tens of thousands of dollars to your lifetime income. If you're recently widowed, don't let grief rush you into a permanent decision. You have options. Call Social Security at 1-800-772-1213 specifically to discuss survivor benefit strategies. Now let me give you the exact steps to maximize your benefits starting today. First, create your My Social Security account at ssa.gov. This free account shows your complete earnings history and benefit estimates at different claiming ages. Check it for errors because mistakes in your earnings record directly reduce your benefits. Second, request a detailed benefit verification letter by calling 1-800-772-1213. This document shows exactly what you're entitled to and helps identify any missing credits. Third, schedule a free appointment at your local Social Security office. Ask specifically about spousal benefits, survivor benefits, and the best claiming strategy for your situation. Write down the representative's name and employee number for your records. Fourth, consult with a fee-only financial advisor who holds the RICP designation. That stands for Retirement Income Certified Professional. These advisors specialize in Social Security optimization and charge flat fees rather than commissions. One consultation could save you tens of thousands. Before we wrap up, let me warn you about 3 common traps that catch smart people off guard. Trap number 1 is taking advice from friends or family who mean well but don't understand your specific situation. Your neighbor claimed at 62 and tells you it worked great for them, but they might have had health issues or a pension that changed the math entirely. Your situation is unique. Trap number 2 is trusting Social Security representatives to volunteer the best strategy. They are helpful and professional, but they're not financial advisors. They process claims and answer direct questions. They won't tell you that waiting 3 more years would give you $50,000 more over your lifetime. Trap number 3 is making permanent decisions based on temporary circumstances. Lost your job at 63? Consider unemployment benefits, part-time work, or tapping other savings before claiming Social Security early and locking in reduced benefits forever. Here's another costly mistake I see constantly. Seniors assume that Medicare and Social Security are the same thing. They're not, and confusing them can cost you money in both programs. Your Medicare enrollment window is different from your Social Security claiming decision. You can enroll in Medicare at 65 while delaying Social Security until 70. However, if you delay Social Security past 65, you need to actively sign up for Medicare Part B to avoid late enrollment penalties. Those penalties add 10% to your Part B premium for every year you could have enrolled but didn't. And here's the connection most people miss. Your Medicare premiums are often deducted directly from your Social Security check. Higher income can trigger IRMAA surcharges that increase your Medicare costs by hundreds of dollars monthly. Everything is connected, so plan both programs together. Visit Medicare.gov and SSA.gov to understand how these programs interact in your specific situation. Let's bring everything together so you can take action today. The 5 mistakes that cost retirees over $100,000 are claiming at 62 without analyzing alternatives, ignoring valuable spousal benefits, getting blindsided by the earnings test, failing to plan for taxation of benefits, and mishandling survivor benefit timing. You now know more about Social Security optimization than most financial professionals, but knowledge without action is worthless. Pick up the phone and call 1-800-772-1213 this week. Create your My Social Security account tonight and share this video with everyone you care about, because this information could literally change their retirement. Hit that subscribe button right now, because next week's video covers 5 Medicare secrets that save seniors thousands every year. You won't want to miss it. I'll see you in the next video, and remember, you've worked too hard to leave money on the table.